Good evening, and thank you for visiting the webinar and joining in. There's a lot of information we're going to cover, and the most important thing here is about mortgages. When we want a mortgage, we go to one of the institutions, and there are many institutions. In the olden days, they would take a bunch of money when the money is ready and go and exchange the house. So there's no mortgages. The mortgages only started very, very recently, like 1900s, and then they would give you, sorry, they would give you the house and they'll take the money. But now the houses have become more expensive and you need mortgages. But then, of course, when you need mortgages, you have to have a certain profile for the lenders to give you the money. So this is the topic today, is about what sort of profile a lender would give money for, and also if we have a lender which is taking more risks. There are all types of lenders who take a little more risk. They'll take a little more riskier deal, and then we'll find that lender for you too. So before, I would like to share a screen with you, which will like to explain, and we'll talk along the way. So let me go and share my screen. So as I said, we have many types of lenders, and they are in the business of making money. They would like to lend money because then they're going to make a small interest, which is their business. But now we have the banks, we have trust companies, we also have private lenders who do this business because this is profitable, indeed. It's like the money lenders of old. So which lender is for you? It depends on your profile. Your work history, how much money you're making, your income, what is the property like, and then what's your character like? We will come to that later. But now the lenders, there are so many of them, and they always want borrowers. So you are the borrower, and you are trying to find a lender which is going to be suitable to you. Remember, the banks are the biggest lenders, but they always have a program in which you fit inside, and you don't qualify. Here we're going to find a lender which you will qualify for. So, and you're the borrower. There are all types of borrowers. They want short-term funds, they want long-term funds, they want to buy a house, they want to take money out from the property. It's called a refinance, when you have enough money in the house. The house is worth quite a lot now, and the mortgage is only 20–30%. Now you want to take money out, you can have another mortgage, a bigger mortgage, and you can have $100,000–200,000 to do whatever you want with the money. Improve the property, or go for a vacation, or make him, whatever. Send your kids to college and then university. So whatever the reason the money is required for, it is there in the house, and we can get it from them, from the lenders, if they find the property suitable for their portfolio. And so let's go to what they would like to see, the lenders, and what you as a borrower is your obligation. So the lenders basically have the 5 things they look after, they look at before they lend their money. They are in the business of lending money, and they are not in the business of losing it. So they have to make sure that these underwriting parameters are within their framework. And of course, something happens that's not in their control, they have resources for that also, to sell the house and take their money back. But that's besides the point. Now we're trying to buy a new house, or we're trying to get a refinance. So the first thing the lender looks at is the collateral. Collateral is the type of house you have. If you have a house which is one-off right in the rural area, it could be a little difficult getting funding for that from the mainstream. If you have a house which is in a bad area of disrepute, you have a problem again. But if you have a house which is quite sellable, they're looking at, okay, if this is the property, in case something happens, can I sell it as soon as possible? If they can, they like it. So the house, how old is it? That also makes a difference. If it's a new house, or it's 10 years old, or 30 years old, or 60 years old, it's a century home. It all depends. It's the risk which they have to take. So once the property is acceptable to the lender, and again, there are many types of lenders. So some will accept the collateral as it is. The other one will accept it by charging a premium in the interest rate, because they're high risk lenders. So assuming your collateral is out of the way now, then the next thing they look at is character. Character is something which they say, how long you've been in a job for, what is your, how long you stayed in a place, are you moving around from place to place, so your job history. All this is very important, because they want to see the stability in your life, so they can make sure that they're dealing with somebody they feel comfortable with. So this character thing is very important. If your income is steady and you've been staying in one place for a long time, and you don't have any judgments against you, or any what do you call arrests and all those things, so that will put them at ease, and then they can also advance money if the character is fine. But even if it is not fine, we have lenders for that, who will take risk again, higher risk. They will charge a little extra. That is the only difference. So the character is the number 2. Then we come to the credit. The credit is basically how have you handled credit in the past? You've had a credit card, you have a line of credit, you're paying for your car, and many other ways where you've been extended credit. Are you paying on time? The credit unions, like there are two, the Credit TransUnion and Equifax, and everything you do is automatically built up. The record is built up. They are building up your payment history. So whenever the lender wants, they can take a credit report and they will find out if you're being late in paying your dues or you do it on time. So that is very important. They also will not pay or they will not fund a mortgage if there's no credit at all, like a newcomer into the country. But they can have other methods of proving credit. But even the Canadian government helps out, the CMHC. If there's a newcomer, they know it is a newcomer. They have other methods of finding credit. And, excuse me. So the credit report is very important, and ensuring that you pay your dues on time is absolutely important. There's a credit beacon score, which you get after all your various credit obligations. A combined report is made, which goes back 4, 5 years, 6 years, and you get a number like 600, 700, 800. The higher the number, the better it is. So objective is to keep your credit report in acceptable limits. And the easiest way is to pay on time. You'll never have a problem. And don't take out too much credit. But this is now we're taking a big money from the lender, so he definitely wants to see the credit. So to go to an A lender who gives us the best rate, if the credit is good, we can go to them and they will give us a very, very good rate. But if your credit is bad, we have a lender for you again. And this lender doesn't look at credit. He looks at the interest he's getting. He's taking a risk, so he will charge a little more interest rate. And hopefully the lender is happy and you're happy. But I'm sure your credit is good, so we're going to take you to a good credit report, a credit lender. And then, of course, another very important part is how much skin in the game have you got? The capital. How much down payment are you making? If you are making only 5%, then the risk is that you only have 5% of the money of the whole house into the property, and if something happens, you can just walk away. So they are a little scared of that. Even then, the Canadian government helps you, where they would insure the mortgage. So this is where the CMHC comes in. This is a high ratio mortgage, which you can go up to 95%, but then you have to take insurance, which you have to pay. It's added to the mortgage, and the lenders are quite happy if they're insured. The Canadian government is going to pay them if there's a problem. So that's why the insurance costs money. But if you are giving 25% down, you don't have to insure anything. And then you have a case where you're giving 50% down. Then you're laughing because all the lenders will want to do business with you. And most of the time, we have a range from 5 to 15%. When you put down the rest, the government, the lenders have to come up with. So the capital, how much you're putting, if you're putting less money, it has to be insured. If you're putting 25%, it doesn't have to be insured. And if you're paying, less than that, we have lenders who would love to give you money because you have more skin in the game. The more you have, the more comfortable they feel. So the capital is as important as anything else. And the last one is the capacity. Suppose capacity is your ability to repay the loan. Now, this is where your actual income, how much you're making, comes into place. Not how long you've been working, but your actual income, which you can prove. You and your spouse who's going on title, the both, or anybody who is going on the title, both the incomes or three incomes are combined, and they're used to calculate the ratios. And if you fall within the ratio, they will do the deal. Normally it's 32% of whatever you make, you are going to apportion it to the mortgage. Now you have heating and other stuff and other loans, and then you're allowed another 10% for doing that. But there's no worry for that. If we don't fall in that category, we have lenders who will look at other stuff, other parameters, and they will again charge a little extra, but it will be done. So the income is very important. If you're business for self, nowadays the banks want proven income. If you're working in some occupation where you're getting a salary every month, you have a proof of income, what you get, and that is used by them, and that's the easiest way. But many times you're business for self, like all these doctors, actually, the business for self, all the truck drivers, all the taxi drivers, even businessmen who have their own businesses, they are actually in business for self. If they are not showing enough income, what they're taking out for personal use on their assessment, like they're paying taxes on only a small amount, but they're making a lot of money on the other one, in their company. To save taxes, they do all those things. But they want proven income. So again, we have lenders who will look at stated income, like I make so-and-so, and then I have these things to prove, my bank statements. I am proving it by getting a letter from an accountant that this money is coming into the company, or get the company's financial statements. So after all that, the lenders are quite happy, they will fund it. But not the A lenders, they always want proper income, provable income. Provable income, that's the word. So these 5 things, collateral, character, credit, capital, and capacity are the 5 most important parameters in the underwriting the lenders look at. And you as a borrower also should be aware that these are the 5 ones and how to enhance them or how to state them in such a way that the lender will accept them and fund you the money. So going to the next screen, like how many lender types do we have? We have the banks, we have the insurance companies, we have the second tier is the trust companies and the mortgage investment corporations who have a lower criteria of they take a little more risk because most of the deals are supposed to be insured, so they can take a little extra risk. But the banks and insurance company also insure high risk deals, but they are not, they are audited, but they somehow place the deals and get it done. And their banks are big, but they have a criteria, and if you fit in that, nothing like it. But then you're stuck with the bank, and nothing wrong with it. But remember, bank is not your best friend because they are doing everything to their standards. They will upsell you with all other stuff like any other business does. But when you independently go according to your circumstances where you can best fit, that is what you should do. And this is where a mortgage broker can help you to find the right lender for you. And of course, for all of the deals, when nobody does, the bank doesn't do it, the trust companies don't want to touch it, then you always have a private investor who will, these are companies or individuals who invest, and they also make money. They take the risk, but they take the reward also by taking a little higher interest rate. So these three lender types, you'll find one of them where you fit in. And of course, our objective is to fit you in where you get the best deal, not for now, for the long term. Because mortgage, as we know, is one of the biggest investment we make as a family in your lifetime. You could have other investment, but the majority fall in that category where this is the biggest investment. So we have to make sure that you are protected for the long term, that you get the best deal. Because one of the biggest problems with the banks is they have a big prepayment penalty. Once you have to sell the house or you want to break the mortgage, sometimes you have to pay $10,000-$15,000 in prepayment penalty to break the mortgage. That's unfair. That's too high. The trust companies usually charge 3% or 3 months, 3 months interest differential, or 3 months penalty, or whatever the payment is of the interest payments. So you don't want to be closed in a bank like deal, though they give the best rate. But if you want to break the insurance or break the mortgage, in any case, then you're paying very, very big penalties, which is not fair. Of course, the private investors, they give you a closed mortgage also sometimes, but they are open if you want to pay them back because they want their money. They'll charge a little bit of penalty, but not as much as the banks. So that's the reason why the lender types have the different criteria. And I'm just talking about the prepayment penalty, which is the highest among the banks. Now, let's come to the process of how the mortgage will be presented to a lender. You as a borrower, fill out an application. Remember, in the application, at least to the mortgage broker, you should disclose your true facts about your case. Absolutely the true facts. And we will know how to present it to the lender. Do not hide anything from a mortgage broker. He is working for you. He is representing you. He is your doctor. He is your lawyer, whatever you want to call it, because he is actually representing you and he has to be given the truth. And remember, you don't have to pay the mortgage broker. They get paid by the lender. So you don't have to pay them. But the main thing is you got to tell them the truth. And the mortgage broker will find the best lender to fit you. And this is based on a long-term relationship. We want to have a long-term relationship with our clients where we represent them for the entire lifespan, if possible. And we get them the best deal because they have to buy the house, they have to sell the house, and maybe do it 4 or 5 times in a lifetime. But at that time, if you have good representation, good advice, you can save a lot of money and heartaches. So when the application is filled out, we get all the documents from you to prove the 5 C's, right, regarding your credit and your job or income statements. All these have to be packaged, and then we find the best lender. And then the lender puts a lien on the property and gives you the money. So that's where the mortgage professional comes in. He is just assisting you. And remember, he's always working in your best interest. If you go to the bank without a mortgage broker, you're dealing directly with the lender. So if the lender refuses for some reason, because some document is not right or some parameter is not within their um, guidelines, they may refuse the deal. But if you now had gone through a mortgage professional, you still would have got the deal done. Many a times, normally 60% of the deals are done directly with the bank. You may be one of the 60%, but the 40% people who don't qualify with the bank come to us. And many people who go to the bank, of the 60%, they always come back to a mortgage professional if they're smart, because they can save a lot of money if they do that. So this is how the information and the documents flow, and how the lender will put a lien on your property and give you the funds which you require for whatever reason. Well, of course, you're buying it for purchasing it, but you could also be doing an equity takeout where you're taking money out from the property. So we're coming to the end. If you have any questions, I want to say that the lender of every type of mortgage deal, a mortgage broker can match you with them. Like we can match you with them. And if you have any questions, we're ready to answer. And engage a mortgage professional for best advice before going to the bank, because it doesn't cost you anything, and yet you will be saving money. That is very important. So I would request you to go to the Facebook page and write a review on our page. And also we have a survey. If you could, I could, on the right side of the screen, on your what you're watching is a button which says survey, right? So please press that button. It'll take you to a survey, and when you finish off, you do write what you heard, was it helpful, what other subjects you want to talk about, and also if you have any questions, you can always email us, and we will be glad to answer it. Thanks for watching this presentation. So now I will go and take the screen off. So thank you very much for watching, and in future, when you have any mortgage needs, do call us. We're always available. And of course, we have a site to which you're watching all this is mortgagewise.info. I would I'd like to take you there also to show you how easy to navigate. There's lots of information there, and please do become a member, because I'm giving a lot of information, and there's nothing to sell there. Only once you see the mortgage broker in action, like you see them talking on the videos, you talk to them over the webinar, you feel comfortable, only then will you ask them to represent you. I understand that everybody has that qualm, because most of the time you are selecting a mortgage professional based on a referral, or you're just going blind. But here you have an opportunity to actually see them in operation and feel comfortable before you proceed. So I would like you to take you to our site, mortgagewise.info. Once again, I will share the screen. You just go mortgagewise.info as I've typed. You will go straight to the site. Now, this is our page, the front page. There's a lot of stuff there. You can read through that. I'm giving you an idea what it is. It is a membership site, but it's a free membership site. This is to prevent unauthorized emails coming to us. We know emails are coming from people who really care about what they're doing, and they're not just sending emails and jamming up our email lines. So now to become a member, you just enter here, or you have to be, no, this is, if you are a member, you can enter from here, put your email and everything, and you're inside. But if you're not a member, then we have these, become a free member. You have this where you can enter your username, email, first name, last name, and then you can register. You'll get an email which will give you your password to enter the site. And this is where you would enter it. And then let me take you inside. When you go inside, we have, this is about us. What we do is we do mortgage tips and videos. We do weekly webinars. We do mortgage consultation, if you wish. And of course, we have the tabs here which you can go and check us out. We have all our licensed specialists here. Like we're adding more and more to our ranks. But at the moment, we are 3 of us trying to help you, and you can choose any one of us. They're all knowledgeable, and we have more people who are waiting to join. And of course, you can make an appointment with any one of them directly from here. Suppose you want to talk to them, you press their face, and you're taken to a place where you can say you want a new purchase, you want to talk to this person, and then what time you want to talk about. You can set up the time. On April 24th at 1 p.m., that's the time. You can log in. If you're a new user, put that, or you can log in using a Facebook. There's a third party, so you have to, create a password for this. And once you finish off, like if I do it with Facebook, it says the order is not confirmed, just to click book now. If I book now, I will get an email saying that your confirmation is booked. You will get an email, everybody gets an email. There you get the email. So this is how you can easily be in connection with your favorite professional. And of course, we have today's best rate. If you want to see the rates, you have the rates here which are available. This is live, so if it changes, it is updated immediately. And of course, we have a blog which will give you lots of information about the various mortgage concepts you want to learn, what's happening. And of course, I would like you, if you like the site, to give me a testimonial. You please give a testimonial to us, and we will post it here so you can help us, other people understand the site is good. And of course, this is where we are watching this now. We are watching this. You just have to start this. This is the survey, comment survey I want you to fill up if you can. And you just have to start your TV whenever you're ready. You don't even have to have anything special. You just have to have your logged onto the site, and you press the start, and then you immediately start seeing the same broadcast. Which now we're watching this. You just have to start this. This is the survey, comment survey I want you to fill up if you can. And this is, you just have to start your TV whenever you're ready. You don't even have to have anything special. So there you go. That was, I'm back again. So I hope this webinar was of value to you, and I would like you to talk to other people who could get benefit from this, and they can join up. It's free to join. And if you have any questions, please do call me. And thank you very much for watching. And I'm online till you did you have any questions for about 10 minutes? So thank you very much. Listen to this music. Thank you for watching. You've been a good audience. And